Welcome back. Joining us now is Amit Goel. He is co-founder and chief global strategist at Pace360. Amit, hi, thank you so much for joining in. I was reading earlier some reports on how markets do tend to get into Jackson Hole meeting. How are they 1 week later and 1 month later? And we absolutely do see a lot of movement in bonds and gold and currencies for sure. What is your sense as we get into a eighth one, the last one for Jeremy Powell, and a lot anticipated? How are you looking at various asset classes, all three, by the way, bonds, gold, and currencies, as we get into one of the most important meetings right now?
Thanks for having me on, Manisha. So yes, this particular Jackson Hole has become more important because some people expect Fed to become more aggressive on the rate cuts in the next few meetings, while there are a lot of others who are skeptical and who think that the fear of inflation and the effect of tariffs kicking in would keep the Fed away from cutting aggressively. So I think any clarity from the Fed chairman Powell is going to be extremely critical. My sense is that he is not going to be as committal as a lot of people think he's going to be. So before the Fed meeting in September, there is quite a bit of data which is coming in. So there is going to be one non-farm payrolls. There is going to be one CPI and PPI again in September. And very, very importantly, on 9th of September, there is going to be payroll revision for an entire year. Now, that is actually the most critical piece of data, because if the payroll revisions are significantly, if they go downwards, so if the consensus figure is that it's going to be somewhere close to 400 to 450,000 jobs is going to be taken away for the last 1 year. If it's going to be much worse than that, then you can expect Fed to be very, very dovish. But on the contrary, if the data doesn't pan out that way, then the Fed could become a little more hawkish. So my sense is that between now and the next meeting, there is a lot of data which is coming in. So Powell is not going to be, he's not going to be very, very, clear as to what stance he might take in, what stance the Monetary Committee might take in September. But I do have a feeling that there is a bias towards him being a little more on the dovish side than him being a little more on the hawkish side. So my base case is that he's going to be a little more dovish, but he's not going to be very, very committal. So now let's come to the effect that it would have on the asset classes. My sense is that Treasury bonds are they are ready to rally. So the long-term yields which have gone up a lot, they are probably looking to go down. So Treasury bonds should do well. Dollar index is probably going to go up, and equities are looking a little, I would say, a little toppish in US. And the precious metals also are looking a little toppish, because if dollar index goes up, and you know that right now dollar index is at 98.43, which is very threatening for the precious metals and for the emerging market currencies.
Sure. So, Amit, where do you see the gold prices going from here then? When you call it toppish, and with your expectations of bond and a dollar index going higher, where are we looking at gold for the near term, let's say, for this year then? And what is your long-term trajectory, say?
Okay. So, Manisha, I have a bias that dollar index is going to go up over the next few weeks, and it could go all the way back to 99, 40, 50, or even 100 in the coming few weeks.
Okay.
If that were to happen, then this would put a downward pressure on gold and silver over the next few weeks. So my sense is that gold, which is currently trading at about 3,335, I would not be surprised if gold tests its support of 3,240, 50 over the next few weeks. So I have a downward bias on gold, and I have a downward bias on silver as well. But if if we were to talk about what could happen post the next few weeks, I think it's going to be largely sideways. But I do feel that over the next 6 months, which means sometime in March to April of 2026, I think gold could come all the way down to below 3,000 levels. It could come all the way down to 2,800 levels. I feel dollar index could go up to even 102, 103 by March or April of next year. And silver could come all the way down to 32, 33 dollars. It is counterintuitive at this point. It is contrary to what people think. But I think over the next 6 to 7 months, there is more downside on precious metals than there is upside. But I do reiterate my long-term bullish stance on gold. And over the next 4 years, I'm still very, very bullish on gold. But I think over the next 6 to 7 months, there is more downside than upside on gold and silver both.
All right, so next 6, 7 months can be quite volatile is the view coming in from Amit there. As always, thank you so much for joining in, and we will keep those levels in mind. And as you said, 9th of September is an important one because the US payroll revision data comes in, and that day we will, of course, continue to watch that as well. But with that, it's time for a short break. More news and updates on the other side.